Hi, fellow traders. I am going to share with you my aftermarket earning strategy. I've gotten a lot of emails about it, a lot of questions about it. It's really, really simple. I wish I had learned about this when I first started trading because this would have shaved about 2 years off of me having to trying to trade and work full time. So it would have taken, I know, 2 years off of me, having to wait before I went full time. But, anybody that can't trade in the morning, but you can trade in the afternoon, this is a really, really good strategy. It's really, the opportunities are there to make these big profits after the market closes. I'm in there every day that there's an opportunity. I'm there and we're trading it live every day. And you're learning how each setup is different and how you have to manage each setup, based on what it's giving you. So before we get started, I do want to tell you if you do like this um, presentation, if you like what you've been hearing about the mental game that I help you develop, because, let's face it, I don't care what you learn. I don't care how much information you get. If you can't execute it, it's worthless. And the only way you can execute in this market is having the right mindset. But I, the best deal is my lifetime elite mentoring package. You get lifetime access to the live trading classroom, all the classes, all the programs that I do now and that I will do in the future. Um, and lifetime, one-on-one mentoring. Now, why do I do it lifetime? Because there are a couple of reasons. Number one, life gets in the way sometimes. It did for me. But some people, you may join a community, you pay 12, $1,500 to join for a year. You spend 4 or 5 months in it, then life happens, you have to stop. When you come back, you're trying to get back into it. Next thing you know, you got to pay another, 12, $1,500 for another year. You don't, and it's that cycle. That I don't believe in. If you want to learn, you make you pay one fee and you could learn as long as you want to trade. And you could come in the live trading classroom, all of that. And yeah, I kind of took that from some of the schools that I went to where, once you have, paid, then you could come back and take refresher courses. You don't have to pay for it. You could come for free because you're already a part of the institution. So, I got that from my education career too. So it's not about trying to get rich teaching. It's, you know, I'm going to put some in, you're going to put some in. We're both vested in your learning and your growth, and more things could get done that way. But you can check out the website, averagejoetrader.org, or email me, ed@averagejoetrader.org, if you have any questions. This is my social media. So, earnings season, real quickly, because some people get this a little bit twisted. There's no official start date that says, okay, earnings season starts this day right here, this date. And there's no official dates that mark the end of earnings season. But earnings season generally occurs between 2 and 3 weeks after the quarter ends. and it runs for about 5 or 6 weeks. Um, and we have 4 quarters. The first quarter earnings season ends at the end of March. The earnings season begins for the first quarter mid-April and ends toward the end of May. Second quarter ends June 30th. Earnings season begins mid-July, which we are into right now, and it'll end at the end of August. Now, the volatility is real hot and heavy the first few weeks, and then it kind of dies off as it gets through the end of the season. Now, that doesn't mean that the end of August, we're not going to get any other stocks reporting earnings. There are stocks that report earnings every day throughout the year, but a lot of we can't trade all of these stocks, or all of these stocks aren't in play. They don't make tradable moves even on earnings announcements. So we do have to be selective. We do have to scan and make sure that we're trading the right stocks, and we kind of go from there. Now, the other thing I want to mention is the SEC or whoever made this rule that requires companies to report earnings every quarter. They're looking at changing the rule and allowing companies to only report twice a year. Yes, that will kind of hurt how much money we can make because we'll only have basically 2 earnings seasons. But again, stocks will report their earnings. Then not every company is going to fall into that neat little window. So it may be spread out, but we're just not going to have those big opportunities that often. As often as we're having right now. But that's another thing to kind of keep in mind. They've been talking about it for a couple of years, haven't really moved on it, and I don't think they will because the volatility that each earnings season brings is really really good. All right, so let's take this is my simple strategy. All right, it's based off the 5 minute ORB strategy that I trade every morning. My opening strategy that I trade the first 30 minutes of the morning is the ORB strategy. So when COVID hit and my original earnings um, strategy was, pretty much shot because all the companies quit announcing the guidance, and that's what made the stocks move, and that's what allowed me to get in prior to the stock announcing and then trading the actual announcement. Now, yeah, it was a lot more profitable and I had an edge. But after COVID, that went away. And then I started looking at this and realized I could use the same 5 minute ORB strategy and I don't have to, be in and have to trade through that volatility. Because sometimes the stock would whip one way and then rip back the next. And it could be really, really stressful. So what I do is I let the 5 minute earnings announcement candle print. And once it prints, the high I mark with a green line. The low I mark with a red line. If it breaks the high, I go long. If it breaks the low, I go short. Now, most of the time, once it puts in that 5 minute high or 5 minute low, it will reverse a little bit. You will have profit taking right after that candle closes. That doesn't mean the stock's not going to work. It's just like in the morning. If the stock puts in the first 5 minute candle and then you may see some pullback. All that is profit taking. There are still people who may have inside information or may like to guess the direction of the stock, and they guess it and they start taking profit after the 5 minute candle. So, we'll see that. But all we're focused on and all we care about is the first 5 minute candle and going long if it breaks the high, going short if it breaks the low. Now we set our profit targets using the daily chart. We look for the daily pivots and the daily moving averages. Those I typically mark every morning anyway. Um, sometimes I may have to mark it on a stock that I, haven't traded in a while, but we mark that up, and also the option activity. Now, if and I'm going to show you where I get that information sometimes. So let's say I'm trading a stock and it's trading around $154, and I see that there've been a lot of call buying for options expiring that Friday of that the stock reports for $175. So if the stock sets up long, I'm going to be looking for 175 for a final target. Now I'm going to take profit along the way because that's our job. Our job is to lock in profit as the market gives it to us. And there's no guarantee that it's going to go all the way there. But that is a goal, that is a target that I'm looking for the stock to achieve. And then the risk is based off the high and low of the 5 minute announcement candle, just like the opening range. So the risk doesn't have to be any greater. It doesn't. You just use the opening range, of that announcement candle, and if it loses that range, then you get out. And then simple additional rules of engagement. And these are things that we don't do anyway. It should be an automatic. We do not short into support and we do not buy into resistance. So if a stock is setting up and is trying to break out and is breaking out into resistance, then we have to wait for it to get over that resistance. Or if we're short and then it's shorted into support, we've got to wait for it to take that support out. We just don't want to make that move. And those are just the simple rules. So the tools that I use, um, Earnings Whispers. This is a free. You don't have to get a subscription to it. You can get everything you need for free. I'm going to show you that in a minute. FinViz. You don't have to have the paid version of it. I do, but it's only 30 dollars a month, 29.95 a month. I think I pay for it. Obviously, Thinkorswim is free, but I only use that to help me find my the daily pivots. It's the the software I use for my charting. Um, and the only big bill or big ticket item I have is Benzinga Pro. I think you have to pay. I think the full price of it's 177 a month. Um, I don't pay the full price. We used to get Benzinga Pro through Thinkorswim, and when Thinkorswim merged with um, people who will remain nameless, Benzinga, they had to leave the platform, so they gave me a special. I paid $7 a month for a year, and then they gave me a special rate, and we use it. We use the squat so we can hear when the announcements are made. Also, they do. If you follow them on Twitter, they do put out earnings calendars, and they do have some information on the Benzinga Pro website, which we're going to get into right now. All right, so before we look at our examples, I'm going to show you this um, FinViz. Now, the first thing we do, I run my scanner. We start this about 3:30 every day. I, I have a preset scanner. That's my aftermarket earnings. And believe it or not, I only have 4 filters. Um, I've got, well, actually, this is actually yesterday, this coming days earnings. Let's go back to, let's see, yesterday after market close. All right, so my scan will have today. I just changed this to yesterday so it could show the stocks that I looked at today, because we're going to use this for, the trading examples. Um, but this is going to be today after market close. I'm looking for stocks that trade over $2 million or that's traded over $2 million that day. I mean, not $2 million, 2 million shares that day. The float is over 50 million. I don't like really low floats. And the price needs to be over 20 bucks. All right, so what we do is we go through and we look at these, look at the chart. Kind of gives me an idea of what kind of room we could get. So I like Google. Microsoft was the one I liked the best because I felt this thing could just take off and go. Maybe run up to 360 or better. But this is another Google stock. Basically the same stock. I think one represents different classes of stocks. One it has voting rights, one doesn't, I believe. But we had TDOC. A lot of you guys like to trade or have to trade lower price stocks. You may only have like $5,000 in a CMEG account. That's fine. You could do that. And you could trade these lower price stocks. They don't move as much, but you can, make money off of these. But for what we looked at today, we looked at Google and we looked at Microsoft. So, we'll go to earnings whispers. I'll just type it up here. So we'll go to earnings whispers, and you can register. And when you register, you get emails, and I'm going to show you the email that you can get. So you can look at the calendar, and it'll tell you how many stocks. Like Wednesday, 101 reported before the open, 162 after the close. You can't look at all those stocks, so you definitely have to filter those things out. All right, so what I typically do is type in the stock, GOOGL. I just typically type it in. It tells me it's reporting today at 4 o'clock. Um, it did beat expectations. They've already, because this has already, been announced. But, and this gives you like the general consensus or whatever. So I use earnings whispers to tell me, it'll tell me what time it's gonna announce. But also, um, let me find it for you. I gotta get my email up. I'm gonna show you the email that we get. Okay, here we go. So here's the email. Um, and you get this on Friday or Saturday, and it gives you a nice calendar. of all of the stocks that's going to report this week that are of note. Um, it also comes on Twitter if you follow them on Twitter. And what I like to see, they give you a little write up on, some of the most popular stocks. So obviously Microsoft is one I was looking at. And like I told you here, there was some notable buying of 19,287 contracts of the $400 call expiring um, July 28th. Well, this thing did not go toward 400 today. It just didn't. So, this was a dud. But remember, it has it has to trigger to the long side for me to use this as a target. So all of this stuff is just is really just giving you an idea of what could happen if it goes one direction or the other. You just have to sit back and wait. And once the stock picks a direction, then you can use or not use the information that you got. So I looked at Microsoft, like Meta's reporting tomorrow after the close. We're gonna be all over that. Google is the other one we looked at, GOOGL. Um, and it gave us everything. It's like there was, but these contracts, um, $95 puts were bought expiring on Friday, January 19th, 2024. This is so far out of the money, it doesn't even make sense to me right now. So that's not something I could use. All right. So, but it just gives you some good information, and we talk about this when we go through it in our sessions every day at 3:30. Um, so this is how I was able to get the ones that I like that I wanted to focus on. Usually, if there are a couple on here, my mind is going to be focused on this. Now, the other thing this does give us at the end, it does have several stocks. It does give us the highest volatility earnings release. So stocks that give us a higher, a larger move on earnings. You see Meta's here, but you don't see Google and you don't see Microsoft. And it's funny how none of these actually they weren't on here and they didn't make huge moves. So there's something to be said about looking at this chart. So I'm excited about Meta tomorrow. Like even Snap. Snap reported today. I don't know how big of a move it made. I wasn't watching it, but it was on the high volatility list. Average move 26%. Options implied move 22.84. So I don't know what the move was, but it did have potential. So that's how I use the earnings whispers and then the Benzinga Pro. This comes up and it does give you some good information. You can get some good information on earnings. But I use the squawk here and you can listen to earnings. So it's good to listen to the option squawk ahead of earnings. It's only running from 11 a.m. to 1 p.m. and guess what? It's my lunch break. So I don't have to listen to this where it messes up my concentration. But this equity squawk, I cut it on, at around 4 o'clock, waiting for the announcements. I don't care what they say so much, other than the stock announced. The numbers are out. And then I can go to work. All right. So, those are the tools I use. That's how I use them. And so, like I said today, Google and Microsoft were the two that I was looking at. And so, here's Google. Here's Google. Um, Google is, we buy the break. Here's the announcement candle right here. So we buy the high of the announcement candle and we take profit along the way. 130, I can't remember what my final target was. It was a linear regression channel and I forgot the price. But I got I had some shares on. Once we broke the high, I added back, got back in full size, and didn't quite get over 132 to hit, for me to take more profit. And you can see it just kind of faded, consolidated here, and then started selling off. So I took it off once we got under the 9 and shorted it looking for the pullback. Got to the first target, missed my second target by a couple of cents again. I missed this by a couple of cents, missed this by a couple of cents. It came back. I ended up covering the rest, and it was holding support. So I bought some to hold overnight. Typically, I like if it's holding support, it typically, gaps up overnight, tries to make that move. So it was simple as ABC 1 2 3. This was a 52-week high break, basically, and I didn't have any resistance up here. So I was just playing psychological levels is basically what I did. Once I got through the linear regression channel and everything, that's just basically what I played. So that was Google. No, we traded Nvidia, Tesla, Google. All right, here's Microsoft. Um, this you could have traded two ways. Now Microsoft put in a big announcement candle and it traded inside of this. I think the conference call hit at 5:30, and you could see we had some volatility, some big volatility. It wicked up. So if you went long on the break of this, you did have a chance to get some profit here before you got stopped out. And then it started selling off. You can see it did set up under the low. You were, $3.50 move down. That's nothing to sneeze at. A lot of you guys are only trading 50 and 75 cents for intraday moves. These are really solid moves you can make some good money on. Okay, remember, I know you're asking about the risk. I know that's what's in the back of your mind. All right, the risk. This is the level we risk on. If we were going long, we risk on the high. Meaning that if I got in here and any one of these candles closed back above this level, and then the next candle made a new high, I'm out. Technically, this trade is dead. So let's say this candle is what printed after this. And as soon as this candle closed, this candle opened and traded higher, I'm out. Got to take it off because technically this is done. Now, if you want to use the 9, and the 9 is closer, and that's not, you know, an unrealistic risk, then yeah, don't use this, use the 9. I would. But this is why watching this video, reading books, and all this stuff is not going to help you learn how to trade these strategies. As simple as this is, you need to experience every scenario you can, because very few scenarios are identical. You may have one or two that does the same thing every blue moon. For the most part, you're going to have very different setups. So this one, it did break to the long side, but look at the wicks on this. You would have been able to get one profit target, maybe two, depending on how close you had them. And it came back, and this was the more, solid move here. But you go back and you look at Google, look how smooth Google traded, almost effortlessly, until we got up here and we started running out of steam. You trade it till it runs out of steam. You don't know how far it's going to go. Nvidia, how far did Nvidia go? Nvidia went traded over $100 on its announcement. So you don't know how far these things are going to go. You have to be locked in and trade these things until they run out of steam. And then once they're done, they're done. Don't force it. No need to force it. So that's how simple it is. I trade this every day. All the strategies that I teach, I trade live in front of everybody in the live trading classroom. It is a learning, it's a learning room. It's not a chat room. We don't sit there and have conversations all day. We're trading. We're learning. We're trying to, put all of these pieces together and get them stuck so that they don't come apart when you start running into problems. So I just wanted to share that with you. I know this was a 30-minute video to answer a 2-minute question, but there were some things about aftermarket earnings that I wanted to get through to you. Now, a couple of things: you can't use market orders. Stop orders don't work aftermarket. Okay, you have to trade limit orders. So you can't set these and walk away. So you have to be there. You have to have the discipline to take the trade off when it doesn't work, to enter it when it triggers. You can't really set it up. Now you can set your profit targets. You can put limit orders out at your profit targets. They work perfect. That's kind of what I did here. But you can't use stop orders. They don't work. Aftermarket and market orders do not work. All right, so I have hotkeys or hot buttons that I click that automatically puts out a buy order on the ask. It just hits the ask. Sometimes if it's really a volatile stock you're going to trade, I may have to build an offset in it. But for the most part, I can just hit the ask with a limit order for the price that's on the ask, and it fills. Rarely will it get partially filled. Sometimes it does, but most of the time it'll fill because I'm not trading with ridiculous share size. Um, the other thing is, a lot of brokers are open from 4 p.m. to 8 p.m. for aftermarket. But if you have a broker like CMEG, they shut down at 5:30. But that's still plenty enough time, for you to take these trades. You might not have been all out here, but you would have been able to take this trade and been out by the time 5:30 rolled around. So don't worry about any limitations. If you focus on your limitations, you get to keep them. And I don't think you want to keep limitations. We want to use them to our advantage. Um, but that's going to wrap it up for me. I hope you guys got something out of this. Again, you can email me with any questions. Take advantage. It's not a sale. It's not a special. It's just what I offer every day. And you take it, you'll never have to pay another dime. So again, any questions, shoot me an email and happy trading.